Hey guys, Taylor the GammaEdge here coming at you with a market recap for July 31st, 2025. Tough day for the market, good day for us though. Levels played out as discussed in the pre-market prep. So obviously just recapping action real quick. We had the large gap up and then really a fade all session long. So we're going to get into the key levels. You can see, a ton of respect. 6,400 was a key level. We have our transition zone here identified, a lot of interaction with that as well. And then look at our intraday volume analysis tools to understand why the trend was headed lower. So it always starts with our SPX, game plan, right? And by what I mean by that is, yes, we go through the SPX complex. That's the full complex, all the way down to 0DT complex, looking at SPXA, SPXP, all the components. First off, to just get kind of a market awareness of from a global basis where the markets are at, and then we'll zoom in and get really refined for our intraday trading. So, right, that's exactly what our pre-market video covers. Feel free to go watch that, or you can go read this in the Discord. I'm not going to regurgitate everything in here. I'm just going to cut straight to 0DTE and then, how our stuff played intraday. Speaking of 0DT, this is what our dashboard looked like in the pre-market. Very clean structure. By that, we mean those transition zones we often talk about are well defined. Top of the transition zone was 63.75. Bottom of the transition zone started at 63.70, which was the DEX transition zone based off of Delta. DEX transition zone Gamma was also there, so we knew that 5-point wide range was very important. And then our drunken sailor range, it's extended down to 63.50 as well. So all I have to say, right, markets move levels to levels, right? So, those key upside downside levels is defined by the drunken sailor range, 63.75, 63.50, but there are, tactical trades to be had within that transition zone, although we expect that to be more choppy price action. So, right, expect choppy within the orange box, and if we're able to get outside of that, then we have more degrees of freedom. Something to keep in mind though, right? There's a lot of nuance in trading. It's not just black and white like we all want it to be. When you get extended or quite extended from those transition zones, you can think of it like a rubber band snapping. So when we had the large gap up, we were extending quite far from those transition zones. So what we said is when that happens, you need to see a ton of intraday volume step up to continue that progression higher, because you can see once we get up in this section, there's no puts to be closed to kind of add fuel to that. So you're going to need those incremental call buyers to step in. And if not, then what we see is oftentimes you see a monetization event, probably what we got today, and then a reversion back to the transition zone, and then got a follow through in the selling that we'll go to today as well, which added to all that. So again, market awareness is very important. Redefining those levels again, 6,400 transition zone noted here. We can see, after that morning sell-off, basically to the penny, top of our transition zone, again, played it back up to 6,400. We had quite a few people in the Discord were shorting around 6,400, given kind of what intraday volume activity was doing, what the market trend model was doing. We'll get to that in a second. And then really just a collapse from there, which we saw a follow through from our various intraday analysis tools. And so, right, as I was saying, in the market trend model, one of the tools here, we can see net a little bit of filter tick selling throughout the session. Then we saw a lot of filter tick session come into the afternoon when we started to see those large spike down right here. And then another key thing is started to see a trend reversal in the cumulative tick yesterday in the afternoon at the close. We called that out, especially in the pre-market prep today. We said, our systematic P-Transit plus GAC strategy is currently not taking trades because our overriding trend indicator is turned off right now. Saw a follow through from that today. So in order for that to turn on, in order for us to get more short-term bullish again, we want to see this cumulative tick start to right the shape and progress higher. But nonetheless, on an intraday basis, this was a good tell to us that the trend was lower. And then lastly, what we're looking at here, this is our, we call it the vol M command. It's SPX 0DT volume that we're tracking throughout the session. On a 5-minute clip, what we do is we aggregate the volume for the call side and the put side. We look at the centroids, which is the middle point of the distribution. We plot that. So we plot that, plot, 5 minutes throughout the session. Tells us two things. A, what is the character of price action from the open until that point in time? Once we connect the dots right, we can see what that trend is. And then B, all else equal, we can project out based off of where the centroids have been throughout the session, where they are likely to head through the close. And right, price follows where price follows where transactions are transacting, where those centroids are going. So again, very helpful in terms of strategy development as the session progresses. And so, right, well, what this was telling us was definitely off the bat, we got that sell off lower, zero call speculation higher, that the trend was lower, nothing moving higher. The put side, fairly flat throughout the session. And so, but net, yes, I know this is the end of the session snapshot, but the trend was decisively lower all session, which marries up well with the market trend model and the intraday action that we were seeing there. Right, and especially some important call out is, once we got that test is 6,400. Remember, that's the key level in the structure. That was plus Gex on the day. It just means that the strike, just based off the distribution and speculation, that was where we saw the most concentration of speculation there. Oftentimes key reference points, we can see that call speculation was flat, right? When we were getting up here. Generally, if we're going to keep going higher, we would see a continuation of call speculation go like this, which would make it much more likely that we were to see some kind of movement higher. But again, flat as a top, put a ceiling on the market, and then, just kind of traded lower from there. And so right here's just a snapshot of what this tool looks like intraday. So this is at 1:40 p.m. We can see, all the centroids being aggregated throughout the session, projecting where price is likely to go. So again, just a little snippet for you of how really the utility of this tool, is kind of understanding the context of the character price action, and then again just using those centroids projecting out where price could be headed to, assuming all else equal. And so the last thing that I want to show you guys here real quick is, an objection that we sometimes have is, I'm a futures trader, how do I use your data? And so this is literally a trade that I did today. So I just want to show you guys that it is possible. Basically what I do is, I take the SPX levels, I just, plot the equivalent levels on the futures chart, just so I'm kind of looking at it like for like. And then again, that's just very helpful. So then I can execute through the futures chart. And here, again, shorting at 6,400, there was the execution playing down to, the top of the DEX transition zone, and then, just progressively locking in profits from there. Yes, we obviously got to move lower, but that was not my plan, right? My plan was just to kind of hold. I would have liked to have traded all the way down there, but once we started to get this reversal, my system took me out, which was perfectly fine. Very, very, very nice trade. Right? The point of this is not to brag. The point of this is to tell you that we're in it with you guys, right? We're not just posting data, then going back into our hole until market open the next day, right? Like we're in there active in the community. We are trading alongside you guys, good trades, bad trades, everything. So yeah, that's really just the whole point of that bit, and that's all I got for you guys tonight. So the point of the video is A, pre-market prep of how we came up with the key levels, and then B, trading those key levels intraday, especially through the context of our intraday volume analysis, market trend model, all that good stuff. And the last thing I want to do is leave you with this. If you found what we said interesting, but not exactly sure what it is per se, we just launched a new free course, GammaEdge Fast Pass. Go to gammaedge.us back and then click on free courses right there. You can sign up for it. Basically teaches you our entire methodology, even what people in the paid community get. We really don't hold anything back. So if you're interested in this stuff, it's just a culmination of articles that we've written. Each article has an actionable takeaway you can incorporate the very next day. There's also, predefined paths if you're a 0DT trader, if you're a swing trader. So, if you don't want to go through the entire article, it's kind of a quick start guide. So you just read the articles that you want to read. And yes, we need your email because it will take you through a sequence of emails that help guide you through the course. So that's why that is important. And so with that, appreciate your guys' time tonight. We'll talk to you later. Thank you. Bye.